how can you handle it in the first instance? There's really two things you can do. If you've got a mortgage and you're worried about your interest rate, there's really two things you can do. The first thing you can do is talk to your bank about fixing your rate. Now, fixing your rate's an interesting strategy. Now, I was always taught if you think you're smarter than the banks, then fix your rate. Because if the Reserve Bank puts the rate up on your bank, and you're on a fixed rate, your bank can't put the rate up on you. That's the whole concept of a fix, right? So then they're running the risk of making a loss, right? Because what they've got to pay for the money before they lend it to you, that profit margin can shrink and disappear. So the fixed rate's always higher than the variable rate because the bank's covering their ass, making sure they've got a bit in reserve so they can still get some money out of you. So really, if you can afford to pay more on the fixed rate, one strategy might be just to put that money aside into its own dedicated little cash buffer account as well. But another way of looking at it, the fixed rate is an insurance policy. So we all have insurance policy on our house in case the house burns down. The chances of the house burning down are very, very unlikely, but yet we fork out a couple of grand a year for insurance to cover it, right? Because the consequence of the house burning down is, huge, right? You have $300,000, $400,000 bill to rebuild the house if you don't have insurance, right? So we pay that little bit amount of money to avoid that. So if you look at the fixed rate, yes, you will pay more on the fixed rate, but if you look at that as an insurance policy and you go, if there was an insurance policy that I could get out that could protect me from skyrocketing interest rates, then I would probably get that insurance policy. So that's where the fixed rate is a good strategy. But I actually think the best strategy is a cash buffer. And what I mean by that, just have a dedicated bank account, put a lump sum of cash in there and have your mortgage coming out of that account. And if it's an investment property, have your rent going into that account, have your pay, your repayment going in there, and then just use that lump sum of money, maybe 10 grand, 20 grand, whatever. Just let that salami slice down on the difference, whatever it is. And what that'll do is that'll buy you time and it'll get you through the worst of this period of time, and it'll also allow you to make a decision. Like if you can see, hey, we're going to run out of money here, well, you got the buffer absorbing it, it's slowly getting salami sliced, and it's buying you all this time to make a sound decision. You're not under pressure. And then that decision, the first thing you might do is refinance your property. So go back to the bank and say, hey, do I have equity? Maybe I'll just increase the mortgage by 50 grand and then put that money into an account to continue to buy you time. You could tell them it's for renos or something like that, and then maybe not use it for renos, just use it as a cash buffer. Or you could sell something, to recreate that buffer. So I think the best strategy would be, and look, this is just Damien Patterson's opinion. I can't give financial advice legally about interest rates and things like that. So go and talk to your bank, go talk to your mortgage broker and actually get their professional and calculated opinion based on your circumstances, et cetera, right? But they're your two options, right? Your fixed or your variable. But I think one way really is just cash in reserve. If you've got cash in reserve, you can salami slice that down. If the interest rate's going up, it's just going to chew down on that, and that buys you time to refinance your loan into something, to get more cash, or sell something to get more, and that'll get you through. All right. Whatever you do, try and avoid selling your property, right? Because your property is going to go up in value and make you money, and the moment you sell it, you won't make a dollar from that property ever again. All right, so hopefully that was useful, and feel free to share it, or I don't know, if I can't share it, let me know, I'll change the settings. But interest rates, interesting system. I do think they're going to keep going up a little bit because the Reserve Bank is clearly taking a robotic approach to it, right? So if you're just coming in late, make sure you go back and watch the video from the beginning where I explained how the Reserve Bank works. But their remit, 2 to 3% inflation. If inflation's higher than 2 to 3%, they'll put the interest rate up. So what's happening is every month the ABS is reporting a high inflation figure, they're putting the interest rate up, and they're just going to keep doing that because that's their duty statement. That's their that's what the government has told them to do, and that's what they've got to do. You will hear there's a bit of commentary in the media about revisiting the remit of the Reserve Bank Board and what rules they should follow, because right now they're blindly following that rule and they're probably being too aggressive with their interest rate rises. But what the flip side of that will be is that when this does calm down, they will have to put the interest rate back down again to re-stimulate the economy. So anyway, hang in there. It's not that bad. And look, anyone who's around, we're really low interest rates anyway, right? So if you can't handle what you got at this low interest rate, you probably really need to have a look at your situation and just scale it back a bit so that you're not overextended, because, you know, interest rates in the 90s, before the Reserve Bank Board was made independent, they went up to like 18%. Okay, so we're only talking about like a 5% retail rate at the moment, which is still really cheap, you know. And I remember, you know, probably before the GFC, we were all paying about 8% interest retail rate. So, you know, get on top of it. All right, that's it. Thanks very much. If you've got any questions or comments, put them below. I might do another video later. Cheers.